This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus agreed to stick to its policy of gradually raising oil output from April on Monday and removed the U.S. government's Energy Information Administration from the sources used to monitor its production in adherence to supply pacts. OPEC Plus and Donald Trump clashed repeatedly during his first administration in 2016 to 2020 when the U.S. president demanded it raise production to compensate for the drop in Iranian supply that resulted from U.S. sanctions. Since returning to office in January, Trump has already called on the Organization of the Petroleum Exporting Countries to bring down prices, saying elevated prices have helped Russia continue the war in Ukraine.
U.S. crude prices fell by nearly 2% on Tuesday as U.S. tariffs on China took effect, though President Donald Trump paused for a month a decision on steep levies on neighbors Canada and Mexico. U.S. West Texas Intermediate crude declined $1.32, or 1.8%, to trade at $71.84 per barrel, while Brent futures fell 87 cents, or 1.2%, to $75.09 by 0617 GMT. U.S. tariffs of 10% on Chinese imports took effect at midday in Asian trade, spurring Beijing to retaliate with levies of 15% on U.S. coal and liquefied natural gas and 10% on crude oil starting from February 10.
Moving on to the top news in the energy sector.
Growing tension across Europe's electricity markets has sharpened focus on the region's most dependable and integrated exporter of clean power, France. France is the largest supplier of clean electricity to Europe's top electricity importers, and has played a critical role in helping to cap regional electricity costs in recent years by exporting record volumes of clean power. France's status as a key electricity supplier may now become even more important after the government of Norway, another major electricity exporter, lost a key coalition partner last week in a dispute over European Union (EU) energy policies.
U.S. consumers will see higher prices at the gas pump from President Donald Trump's decision on Saturday to apply tariffs on Canadian and Mexican oil, according to analysts and fuel traders. The likely hike in fuel prices reflects the double-edged nature of Trump's trade protections, which are designed to bolster domestic business and pressure U.S. neighbors to curb illegal immigration and drug smuggling, but which will also run counter to his promises to tackle inflation. The U.S. imports some 4 million barrels per day of Canadian oil, 70% of which is processed by refiners in the Midwest. It also imports over 450,000 barrels of oil per day of Mexican oil, mainly for refiners concentrated around the U.S. Gulf Coast. Next, we have the top news in metal market. Gold prices firmed on Tuesday, holding near a record peak hit in the previous session, as lingering U.S. tariffs on China and inflation concerns boosted safe haven demand, while attention also turned to key jobs data set to be released this week. Spot gold was up 0.3% at $2,820.94 per ounce, as of 0436 GMT, after hitting a record high of $2,830.49 on Monday. U.S. President Donald Trump suspended tariffs on Mexico and Canada on Monday, agreeing to a 30-day pause in return for concessions on border and crime enforcement with the two countries, while levies on Chinese goods are due to start soon. The market perceives Trump's tariff policies as inflationary.
U.S. companies will look to the Middle East and India for more aluminium and to Chile and Peru for copper as they seek to circumvent sweeping tariffs imposed by U.S. President Donald Trump, according to industry sources. Trump's orders for additional levies of 25% on imports from Mexico and most goods from Canada, as well as 10% on goods from China, have been light on detail. But they are scheduled to kick in on Tuesday and have jolted markets. U.S. users depend on aluminium producers in Canada such as Alcoa and Rio Tinto for more than half of their imported needs and will look for alternative supply, analysts said.
We will now look at the top news in the agricultural sector.
Chicago corn futures gained more ground on Tuesday, as U.S. President Donald Trump paused his plans to impose tariffs on Mexican and Canadian goods. Soybeans and wheat slid after closing higher on Monday. While Mexico is the biggest importer of U.S. corn, China is the leading market for U.S. soybeans. Mexico, Canada and China import several other agricultural goods from the United States. There is some relief for agricultural markets with suspension of U.S. tariffs on Canada and Mexico, said one Sydney-based grains trader.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.